Gold doesn't go to $3,000 without a crisis to get it there, whether it's a sovereign crisis, whether it's a US banking crisis, whether it's an escalation of war. Gold gets to 2,500 over the next 18 months. I don't have a problem with that. First comes gold, then comes silver in these baskets. And silver has industrial applications. That makes it more volatile and more difficult to use. However, you can't destroy silver. It doesn't go anywhere. It's limited and it can't be fabricated. So that's why silver's going to be involved in it. So what they figured out is we need to create something that ultimately is a settlement medium.
Central banks' gold purchases have accelerated to record levels in recent years as they seek to diversify reserves and reduce credit risk. China and Russian central banks are leading gold purchases, with India, Turkey, and Brazil also increasing bullion buying. The world's central banks are sustaining 2 successive years of more than 1,000 tons of net gold purchases, as the World Gold Council reported in January. Importantly, gold stays above the $2,000 level despite outflows in gold ETFs, highlighting the strength of the core demand for gold holdings. Another factor bolstering the price of gold is the apparent achievement of a soft landing in the U.S. economy, with the latest data showing cooling but still robust growth. From here, markets seem to expect a powerful rebound in growth in corporate profits, supporting strong equity returns. Famous analyst Vince Lanci sees that if the U.S. economy experiences a soft landing, gold could reach $2,150 by the end of the year. However, what truly captures Vince's attention is the analysis provided by Saxo Bank, which proposes that gold reaching $3,000 would likely require another significant geopolitical event, often called a black swan event. According to Citi, gold prices could reach $3,000 per ounce and oil $100 per barrel within 12 to 18 months due to potential catalysts. Historically, gold's surge to such levels stemmed from sovereign or banking crises or wartime escalations. Vince agrees with projections of gold hitting $2,500, but notes that surpassing $3,000 usually requires a catalyst inducing widespread panic buying. Gold, followed by silver, is becoming increasingly integral to international trade, particularly as countries seek alternatives that cannot be easily manipulated or confiscated by the West. Vince suggests that gold and silver play crucial roles as settlement mediums in closing deals and balancing international trade accounts, providing stability and security in an uncertain financial landscape. We will present clips from Vince Lanci's interview with Arcadia Economics. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Central bank demand is not going away. Pegged it as central bank demand is between 19 and 1950 now. They're not chasing it, but they're there. Tactically, that's where they are. And then they said, if the West, specifically the U.S., economy has a soft landing, then gold should have a year that ends up at 2150, which I thought was interesting. But the thing that was really interesting is, if you look at this Saxo Bank analyst comment, what gets gold to $3,000? And I'm going to tell you, according to Citibank, what gets gold to $3,000 is another geopolitical black swan. So, paraphrasing them, the report said they don't use the word black swan. They use the phrase, not outliers. I forget what it is, but they use their own like little black swan type of phrase there. And given the risk of more geopolitical uncertainty, for example, the sanctions against Russia, if we start allocating the money there, you could see a $200 move in gold overnight. And that could snowball into a move to $3,000. So to respond to the Saxo Bank analyst, gold doesn't go to $3,000 without a crisis to get it there, whether it's a sovereign crisis, whether it's a US banking crisis, whether it's an escalation of war. Gold gets to 2,500 over the next 18 months. I don't have a problem with that, but gold doesn't go to 3,000 unless there's a catalyst that makes people panic. They're all in on it, trying to buy gold and silver at cheaper prices. Why would they upset the cart? And the answer was, following the logic that I was going down and the evolution of their own thought process. All right, we'll use our own currencies. We'll use some commodities. Oh, we can't use those commodities. They're no good. Let's use gold. Well, not everyone has gold. This is about the time you and I started talking about India buying all the silver. Now, India has a lot of gold, don't get me wrong, but silver works. You're a Latin American country with a lot of silver. You're like, Hey, I want in. What's my silver worth? Well, your silver's worth what it is compared to gold. And the ratio of silver to gold will converge on that. Anyway, first comes gold, then comes silver in these baskets. And silver has industrial applications. That makes it more volatile and more difficult to use. However, you can't destroy silver. It doesn't go anywhere. It's limited and it can't be fabricated. So that's why silver is going to be involved in it. So what they figured out is we need to create something that ultimately is a settlement medium that we can use to close deals every month to settle out our balances, going out back to what Luke said, the settled differences in gold. And that settlement medium has to be something that the West can't take from us. It doesn't rust, doesn't go bad. And that's going to be gold. And then it'll be silver. And that's what they're going to do.
The world is transitioning away from reliance on the U.S. dollar as the dominant global reserve currency, leading to a surge in central bank purchases of gold and a reevaluation of international investment strategies. This shift reflects the emergence of a multipolar world characterized by countries increasingly using each other's currencies for trade and investment. Vince contends that a single currency akin to the euro is unlikely to materialize within the BRICS nations, highlighting the complexities and diverse economic interests at play. As of Q4 2023, the euro holds a share of 19.58%, making it the second most important international currency after the US dollar. This surpasses currencies such as the Japanese yen, the British pound, and the Chinese renminbi. However, attempting to convert large volumes of one currency into another without adequate liquidity could lead to substantial losses, as the market may struggle to absorb such transactions seamlessly. Vince underscores the imperative of stability in currency systems, advocating for currencies to be backed by tangible assets like gold and silver. Such backing would furnish currencies with a reliable foundation, shielding them from speculative attacks and ensuring greater resilience in economic fluctuations. Let's get back to the interview.
We're already multipolar. We're already using each other's currencies. Why stop? By the way, that's a reason to not have a single currency like a euro. There will be no BRICS euro, that's traded commonly. The second thing you could take away from that is, aside from the dig at Western currencies, they're no worse. They're all convertible in current transactions. Now, they are all convertible. You can swap rubles for yuan and there's an agreed rate, but those markets aren't deep enough. The FX market has to be deep. You can't just go in there and say, I'm going to convert 1 billion, 1 trillion rubles into yuan. It's not going to happen. You'll get destroyed because there's not enough financial depth. That's what the Western is a master at. So in a good way, if you don't have the financial depth of liquidity that you need to have these type of huge scale trades, you need to have something anchoring those currencies. Rubles for yuan. I need to do a bazillion ruble trade for yuan. Well, that's a lot. I don't know that we have the liquidity to handle that. And so we're going to protect ourselves by, number one, backing it with something that's stable like gold and silver. We think that our economies are upstanding and ready to go, and we think our currencies need a place at the table. And this is the other thing. We're no longer going to kowtow. Sorry to use that word if you're thinking about this in Chinese terms. We're no longer going to give up our rights to sovereignty by using one nation's currency, and that's what they're saying there. The international currency means, at the very least, something that we can agree on as nation states to settle our current accounts at every month. At the most, it's something that you can transact business in the street. And that's not happening, at least not for, not at first. We need, now the next part, we need only political will, because technically this currency is almost ready. The software and mathematics tools have been created. Okay, without getting into the contradiction at Lavrov, because we're going to do that as well, right? But this is where I think there's some, what's the word used? A little Pinocchio, a little shenanigans going on there. I've spoken with, I've been a follower of M-Trade in the early days. And it's my understanding, and this is complete speculation, it's my understanding that the currency is not almost ready. It never was almost ready, okay? The software and mathematical tools have been created, yet by the Bank of International Settlements, by the West, they don't have this set up yet. They don't have it. It exists, but they don't have it yet. Now, I want to step back and not abuse him too much on this statement. To give him credit, yeah, the technology is available. The math has been done. That's not the problem. The problem is we need to agree on what the money is. Is the money oil? Is the money pistachio nuts or toasters, as you and I were talking about? Is the money gold? Is the money, what is the settlement medium? The currency is the piece of paper that says that the settlement medium is toasters or gold. And so I believe that he's either being willfully insincere to try and sell it, or he's saying that it's not that important. What is important is we have to figure out what the actual money is.
Gold continues its upward trend for the third consecutive session on Monday, but stays below the crucial 50-day moving average of $2,030.36. This movement in the gold market reflects a complex interplay of global economic and geopolitical factors, along with shifting market sentiments driven by key economic indicators and monetary policy expectations. Silver's outlook for the upcoming week remains mixed with a cautious tone, facing potential resistance near $23.92 to $24.39. What are your thoughts on the future price movement of gold and silver? Share your thoughts in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.